You may have forgotten about this, but this is the fifth or sixth 20% drop in Bitcoin in the last year. That means you've dealt with this before. It's strange that you just forget about it. And I think Coinbase sent out a really cool tweet that said, there have been 5 Bitcoin bull markets. Should you want to ride a bull market to the top, you'll have to get through the following. It went from 5% to 10% 6 times, 10 times, 22 times, 33 times, and 70 times. That's all during a market boom. So you have to have a certain amount of guts. You have to be able to turn off your screens and Twitter and ask yourself, has my thesis changed? Is this technology no longer being used? Does it have any other reason to slow down? What part of the business cycle are we in now? I spend a lot of time trying to teach you guys that this is a major asset that moves with the business cycle. It looks to the future, like tech stocks, and is driven by the liquidity cycle and other factors. Has the business cycle changed in a way that makes us think the crypto cycle will fail? Well, most likely that's not a yes. That's why it's corrective price movement. Also, if you have some extra cash lying around, you can use these fixes to add. I did that. I had some extra money, so I added to my Solana position. Good job. Plus, I found that it works really well over time. Taking advantage of drawdowns is a key way to make more money in this space. I didn't run out of any of the big recurring ones last time. I had no plans to do that. It wasn't like I missed the top or anything. I knew it would be hard to get back in. You can't add X sum back in after taking it out. You bet less because you don't wish to lose everything. Everything about your mind is wrong. I like to say, well, this is a longer-term trade instead. When the big draws come in, I'd like to add one more thing. Then you keep adding to it until you reach all-time highs before the market does. And that is a real ability. What's going on now? What's wrong with crypto? The same reason tech has been shaking. Its cash flow is stupid. In March, Bitcoin prices reached all-time highs right before its halving event, which gave buyers a lot of hope. A lot of people thought that the strong demand from spot Bitcoin exchange-traded funds ETFs would keep prices high or even push them up even more. Unfortunately, these dreams were dashed when the cryptocurrency market hit setbacks instead of new highs and big profits. Raoul breaks down the workings of the bull market and gives us clues about what's to come in his newest video. He says that the current turmoil in the market is caused by global liquidity problems that have been made worse by the Federal Reserve's policies of tightening money. Powell says that this unstable phase could last for a while. Even though things are unclear, Powell adds a note of hope. He thinks that the Federal Reserve will finally change its mind and become less strict, which, along with other factors, will make the cryptocurrency bull market go strong again. Everything that has value is driven by liquidity, plus crypto in particular. Adding or taking out cash is easiest to do in this currency. Based on the liquidity cycle, I was able to pick the right time for the bottom to be in 2022. The parts of the liquidity cycle that look ahead will still be in effect well into 2025. I don't need to worry about anything. That's why we're looking at the changes in cash. The Federal Reserve's balance sheet, which they've been doing QT, controls US cash. They have been making it harder to get cash by tightening it. That's been canceled out by the reverse repo being drained. The reverse swap is the opposite of what the QT did. Finally, the Treasury General account is the other part of the issue. Janet Yellen is in charge of this account, and it is like the government's checkbook. She's been putting that together. Because of these, the cash level was going up slightly in 2022. You learned from the everything code cycle that there is no way to pay off your bills. People now use the word fiscal dominance. This is the code cycle I've been talking about for 2 years. The everything code cycle says that the system has too much debt if GDP growth is too slow. Either interest rates need to go down or growth needs to speed up. Now, over time, growth is caused by changes in population. That's not something we can change. You get growth that goes up and down, but not the overall trend rate growth, which has been slowing down. Interest on government bills has to be paid for by the GDP that is available. That's all of the debt in GDP, and 120% of the debt is in the private sector. Our GDP isn't high enough to meet the bills. When interest rates are high, this gets a lot worse. The average rate of GDP growth is about 1.75% or 2%. At the moment, the interest rates on, say, 2-year bills are 5%. After adding in the private sector, that number goes up to 2 times what it was before. Now you have 10% of interest payments and a nominal GDP growth at 5%. The credit markets have been going crazy because there isn't enough GDP. This is what's wrong with not having enough GDP growth. This is the round of all the code. It leads to stimulus, which is also known as more cowbell. There are various methods that can be used to provide stimulus. The most clear way is for interest rates to be lowered. The road has been like that before. The other way is to add money to the system through a backdoor method. The one most people know about is quantitative easing. The other is taking money out of both the reverse repo and the bank general account. It tends to be that way. There are more to come, which I'll talk about in a moment. Where are we now? What was the point of the air pocket? There was QT going on, so they sold bonds. It has been putting money into the budget because tax payments have been coming in. They leave money market funds and go into Janet Yellen's bank account. Since she hasn't spent the money yet, it takes liquidity out of the system in the form of sitting cash. By putting out short-term notes, she's been trying to help the market. That used up all the reverse swap, but the markets are now turning around very quickly. In other news, Jay Powell said, "Hey, we don't want to sell as many bonds. This is called quantitative tightening, and it means that we're going to make it easier for people to get cash." Though Janet hasn't said yet that she's going to put out more short-term notes. The opposite repo is pretty much empty, so it's not really possible. She's going to wait until the election is almost over to open her checkbook and give everyone money. In the second half of the year, she will do that. She has done something magical again. She said, well, I'm going to keep selling these short-term bonds and buy back some longer-term bonds. It's the old, hard to sell off the run ones, but really it's just reusing cash. Adding money to the system is what it does. Janet began to add cash to the system, and Jay is making sure that he takes out less cash. There is almost no more reverse swap left. After a little while more, it will all come down to Auntie Janet. She will then start writing checks and giving money out. Basel IV is another piece of magic that's coming up next year that most people aren't aware of. Basel IV and the Basel deals are rules for how banks should handle their capital after the financial crisis. Because Basel I was put in place, people had to hold more regulation capital. That means you need to buy more government bonds. That's going to get even stricter with Basel IV, so banks in the US, UK, and Europe will have to hold more government shares. What a good thing, because you need a bar of bonds to make the system more liquid. That's on the way. I think Europe will be the first to join in January 2025. The US and UK will follow in June or July 2025. At a fundamental level, there is money coming into the system. They are making a new bar of bonds that is bigger. This is just the Fed. Over time, we'll see more of these kinds of things.